Hello everybody, hope that you are very well and welcome to this evening's Contenders livestream number 88. After a bit of problem getting it started, we're finally here, live, and all is good. I think everything should be fine in terms of the connection. Hello. Everybody looks like they're in and everything is okay. So this time it's working fine. So hello, welcome everybody, hope that you're well, and welcome to the stream this evening. I'm debating what to do tonight. We are currently at, let me just double check something really quickly. Yeah, so this is what I'm debating. I have planned for tonight fractals. And as you all know, like, people are really excited for the TPO series, Time Price Opportunity. We're going to be going through and teaching about TPO. We're going to be going through like the Igor sessions and everything to do with TPO, really, from the absolute beginning to the absolute end. And honestly, this is going to be like my best. I feel it's going to be like the best work I've done. I've put in a lot of hours into making all the content. And I know the exact date where I want to start it and the exact date where the TPO series will end. So I have all the lessons fully planned and the exact order and how everything's going to go. And I have basically a week which I need to fill. And one of these weeks for the Contenders was going to be, I didn't know what I need to do something that I was going to put in it. So because we have decent volatility tonight, because there's a lot to talk through, I either have an option of putting in the like a kind of a filler week with some live trading today, or I could try it. I'm just thinking, because we actually have some decent volatility today, because we have a pretty good plan I could talk you through. I think what I'm going to do is use the week that I wanted to basically fill with I had nothing planned before the TPO series starts, rather than risking it for another week when we might not have volatility. I think for me personally, it makes more sense to move the fractal. That will then be put into the filler week. And today I'll just go through some sort of live trading. We have really good volatility. Obviously, Bitcoin moved 10% in just over 12 hours. So we've seen pretty decent volatility. There's a lot to go through. So I feel this is what I'm going to do on this stream tonight. And then I'll put back the fractal stream basically for the filler week that I had absolutely nothing planned for. So that's going to be what I'm going to do tonight. And this, for the fractal stream, will basically be moved back slightly. That basically will then give me a really good start for the TPO series, which I just want to give like full attention to for the whole of the length of time. I'll have no weeks with any gaps, and it will just be TPO until we obviously finish the TPO course. So that will make me really happy, and it will make you guys really happy as well. So that's what I'm going to do, and I'm pretty happy that we can see this on Bitcoin volatility wise. So it's not going to be totally and we won't just be looking at sideways stuff. So that's what I'm going to do tonight. And let me just make sure you can all hear me okay. Yes, I guess everybody can absolutely hear me fine, because everybody's saying go for it. That's good. You all are interested in looking at live trading. So obviously we've got to do the legal disclaimer to start. No financial advice, obviously. I'm just going to go through the charts here in an educational way. Okay, but there are actually some really good insights that you can get from this nevertheless. So it won't be just a waste of time. It will actually be a pretty insightful time. So, this is the thing. Obviously, I'm doing a lot of public videos at the moment, and with the public videos, I never ever go into a lot of depth. I keep it I keep it very high level. Do not go into in depth at all, and it's kind of, there's information given, but I don't like to go very in depth on my public videos. So what we can do here is review this section here, especially what happened below the daily, how this was traded, then moving up to here, then moving on to what's happening right now, but with actually going into detail, so it's actually valuable and educational for you. There's a lot of insights that you can take from this in terms of reading the volume. Okay, in terms of reading the volume, in terms of reading the open interest, in terms of reading how we could recognize that this move was not to be shorted, and how to recognize what's actually happening right now. I feel there's there's a lot that we can take away from this. So let me explain it in a lot of detail. And as always, if you have any questions, we'll take the questions as we're going along, I feel, in today's live stream. Be a pretty nice one. So first of all, what I want to start off with is going over exactly what we're looking at in this section of the chart. Obviously, the whole framework that we have at the moment is built off of 3 daily levels. So in terms of our, as simple as you get, really, it really is as simple as you get. We had this daily at the low, we had this daily, we had this daily. We could have obviously added in this daily here as well. Okay, so that's obviously a daily level as well. So we basically have 4 main dailies. This one at 49,743 is like a smaller daily. Those 3 dailies have been our reference points pretty much for the last few weeks now of trading. And what happened yesterday? Well, if you can remember very well or not, we had this move up into the daily yesterday, which was obviously confluence with the CC. So really simply, you move up into the CC with a back test of the daily. Obviously offers you a short position. What happens in the end? You make your way back down below this daily, and this was pretty interesting. Okay, so this one was pretty interesting, what happened down and around here. And I always think you want to approach your trades in terms of, if you're in no trade, it's always a lot harder to take the next trade. For example, you think Bitcoin is breaking down heavily. You believe Bitcoin's going to break down heavily. Well, obviously the best trade was doing like I done, shorting the CC in confluence with the daily. That's a good confluence for a short. But the problem that you're going to be left with is if you didn't take that short and price drops, price dropped there nearly 5%, and you're not in a short position, but there's a possibility that Bitcoin's going to say $40,000. You don't want to be left on the sidelines, do you? And hold from 47,000 all the way to 40,000. That's going to be pretty damaging to your portfolio. So you're left in a position where you have to get more aggressive on your shorts, don't you? Because you don't want to be left in the position of left out of the market and holding all the way to the downside. It's going to be pretty damaging. So you have to be more aggressive on your shorts. So I understand why people are shorting the back test of this daily. It's been our bet reference level for the past 3 weeks. So I can absolutely understand why there are people shorting at this zone. What can you look at in terms of your open interest and your volume statistics? One thing that absolutely screamed to me why you don't want to be overly aggressive, even though you might be feeling a little bit of it, you've missed out. Why don't you want to be overly aggressive on trying to get into a short and essentially panic selling or panic shorting, FOMO shorting, thinking, oh my God, I need to short because it's going down lower? What was a sign that you could look at here essentially of why actually was there a likelihood that we will be breaking up from here? Well, ladies and gentlemen, it's nothing new. It really isn't anything new. What we had here was the back tests of the daily, but the move down was on a decrease in open interest. So you decrease in open interest as you move down. That's already a bullish sign, because it's bearish if you move down with increases in open interest. It's bullish if you move up with increases of open interest. But if you move down below the daily with a decrease in open interest, you're essentially just stopping out people. Bullish reason number 1 of why you didn't want to get too aggressive, and period. Reason number 2 why you might have not wanted to get so aggressive. Look at this. CVD divergences building. Yes, you were making slightly lower lows, but if you look at this in terms of the amount of selling that you had going on here in relative terms, and this is where you can kind of get a little bit of experience, I suppose. You can see here, you are, it's not really bearish divergences, but the relativeness of the lows that you're making is not substantial. You have the $47,000 point of control, which is massive support. And as well as that, you see the amount of selling that's happening here is really big. 22 million at this low, 30 million at this low, 16 million at this low, 14 million at this low, 94 million on this low. On the original breakdown, 124 million. So if you look at the delta is very low, but price is not really moving down. So what do we say here? Price is there's massive shorts entering the market, but is price doing a good job at moving down lower? Hopefully you can answer that. There are multi-million shorts entering here, but is price making a good attempt at moving down? We're on the 1 minute chart. You cannot even break the lows. I would say price is not making a good attempt at moving down with millions of shorts opening, with the open interest originally climbing down. I mean, I was actually shorting each backtest of the daily, but I was scalping it. Where was the reason? As soon as you took this, as soon as you come back above the daily, you really should have been in the position of knowing to yourself, stop shorting this. I would have been thinking to myself, okay, this is not, you no longer want to keep on shorting this. Okay, start to build up here, increases in open interest, increases in volume. You break through the level, You back test it. So you break through, you backtest resistance into support, you move up again, you continue to get your increases in open interest. And look at this whole move. This whole move that you saw, look at the open interest. The open interest is increasing. E.g., I really do not think, personally, I didn't short any of this. I can say, hand on heart, I did not short any of this rise. None of that rise was shorted from myself. Why? I recognised we were in a short squeeze. I recognised the open interest was increasing. I recognised the volume's increasing here. E.g., you don't want to short that. Okay? One other thing, and this is where experience is really, really, really helpful. And, it's these sort of tips that you just can't get from a trading book. And one tip that I will tell you in trading Bitcoin, which is a really, really, really helpful tip, is if you break a level such as the daily, you break a big reference level, and you spend time below that level, it's a lot more, in this case, bullish. If you break a level and you hold it for a significant amount of time, here we held it for 6 hours. If you break a big reference level for a significant amount of time, and then you get back above the level, that should magnify the move. Okay? If you come down below a big reference level and it's instantly reversed, that's never going to get as much follow through as if you break a big reference level, hold it for a fake out and then break back above. That is going to get a lot more follow through to the upside as if you just do a quick V shapes. Why? Well, think about it. It's not that difficult. If you break a big reference level and hold it for a significant amount of time, you are then going to be trapping a lot of people when you come the other way. So as soon as you come back above this daily, you have millions and millions and millions of trapped shorts down at the lows. What are they going to do? They're forced to cover their positions and buy. So you've then got a lot of people that are trapped down here. They're forced to buy. You see a lot of people, in my perspective, this is an acceptable short, but as soon as you break above it, that's a long position because this is a deviation from the range. So you've got people closing their shorts. You've got people opening new longs. E.g., this is a really good, obvious level that you really should be longing. There is zero reason to be shorting any of this move. Even this, where we were hovering around this daily, I did not short this. If you watched my public update from this morning, I give that sort of information. I was not had zero interest in the world of shorting this. Why? I recognize that we're in the middle of a really powerful move up. Look at the open interest. This is really bullish open interest, okay? Volume increasing on the move. I've recognized, okay, we've done essentially a long deviation. This is going to likely get more follow through than what people are going to expect. I don't know. There's those sort of things that really aid you, because a lot of people are going to be thinking, like, this is the daily resistance, let's short it. And unless you have that knowledge and experience, then how do I know when to short or when to stay out of the market? How do I know if there's a CC to short a CC or say, no, I'm not interested in this one? For example, how many people, I don't know, because I was asleep, but how many people inside of the group maybe were thinking, right, high to low, let's short a CC? How many people were shorting that CC, for example? How many people were, I don't know, just a lot of things where I would be, for example, saying, well, I'm not interested in shorting this. How many people in the group today shorted this daily? I mean, yeah, it maybe worked for a scalp position, but I don't even really feel it worked as a scalp very well. But it's just like recognizing, okay, I actually want to trade this level, or being able to say to yourself, no, I don't want to trade this. And how do you get to that level of saying, this is the CC level. Daniel takes a lot of shorts off the CC. How do I know this time I'm not going to short it? How do I know this time I'll short it, this time I won't short it? If you might think it's the exact same setup. Well, the thing is, you never get the exact same setup twice. The setup is always different because the context behind the move is always different. So, for example, this CC that we shorted here, okay, why was this an acceptable short position of the CC with the daily? Why was this an acceptable short, but the following CC is not an acceptable short, in my opinion? Okay, so I shorted this. Why would I not short the next CC? Well, the reason is the context. The context inside of this CC, where we were inside of a bearish range and there was no short squeeze. Period. This was an acceptable short. Why was this not an acceptable short? We had just seen a fake out of the low of the range. We're coming out of that with an increase in volume and increase in open interest. Just from experience tells me That is not a good short position. Experience tells me this is a good short position. That is exactly it's almost the same trade. How do I know to take this short and not this short? Well, the context of why we're moving up to that level, period. It's all about context. And you can't understand context from a textbook. It's impossible. You have to have real world experience to start to understand the context behind moves. Okay. So with that sort of emphasized, personally, I took a short today off of this daily. How did I know to short this daily? Here on the retest, but I didn't want to short the exact same level earlier today. Okay, so I did short this daily, but I did not short the exact same daily earlier. So why was this an acceptable short position today? Well, a few reasons. Just like we saw the fake out of this daily here, what happened to today? We saw a big fake out above the daily. Okay, so this is an acceptable short when we've seen the fake out above the level. You look inside of the volume. You want to see how many, trap longs there are coming up into this high? Well, just look at this. Increases of open interest. 28 million, 18 million, 16 million, 18 million delta. Okay, so this is delta. 18 million delta. I mean, it's just staring you in the face. This is increases in open interest. So why is this bearish? It's more bearish because you saw the open interest increase above the high. That is then considered bearish when you come back below the level. So why is then it acceptable to short the retest of the daily here where it wasn't acceptable to short it now? Well, now I have a clear invalidation. Think, if you're shorting earlier, if you're shorting this morning when it comes up into the day, where's your stop loss? Where's your invalidation? Well, I'd say, I don't know where my stop loss is because I don't have a stop loss to base off. I'd have to go off of like 2 weeks old price action. Not acceptable. Now, the second time when I was shorting it, where's my stop loss? Well, my stop loss is easily defined. I can use the high of the move. That's the total invalidation. Because I know if I'm looking for the retest and I have all these trap traders above me, if price gets through that high, my idea of shorting the daily, it's invalidated. So that gives me an acceptable stop loss. That then gives me an acceptable trade. We're not in the middle of a short squeeze anymore because we had seen a significant decrease in price. It's as simple as that. Okay. Obviously, what we've done now, pretty simply, come down, taken the lows, and we've got back above. So it's like a fractal, like what our stream is going to be about, fractals. This is essentially all fractals. This, what you saw here, is a smaller term time frame picture of this. Okay, look here. You have a level. You break back below it. You break back above. Here, you have your level of support. You break back below it. You get back above. So it's like it's the same move on a different time frame. Let me just take a drink. Oh, my throat. So yeah, that's what I really wanted to start off talking you through there. How we're knowing which ones to take, which ones to not. Obviously, this is derived from the context of how you're approaching a move. And the thing is, no move is ever going to be the same. So it's impossible to say short every CC, for example, because no CC is ever the same. The context of how you approach every single level is unique. Every event is unique. And it's impossible to think, this is why I feel discretionary trading is the best. Because you might have a really hard rule that says, and I've given this as a trade set before, always long the CC. Let's just say always short the CC when it's on the VWAP. That might be a hard rule for you to always short the CC on the VWAP. But let's say today you had tried to short the CC while it's on the VWAP. You would have shorted that and you'd have lost the trade. But how could have you know not to short the CC on the VWAP today? Well, because the context is you're in the middle of a short squeeze. So you can see how sometimes you can have hard rules that always tell you to take the trade. But if you have enough experience to recognize do not take that trade, well, then you can save yourself a loss. Okay. And obviously that's going to be good or bad for some people. Some people don't do well with discretionary trading where they can have a little bit of flexibility. Some people want that hard rule set because they don't do well with being flexible. Myself, I don't know. I can control myself well enough to be flexible, but not everybody can. But yeah, that's what I wanted to start off with here. So now we can start to go over what are we seeing here locally? What's the next best trade? Okay, so this is what I would be looking at. Okay, so we're going to look at this on a few different time frames. Look at this on the 15-minute chart. We got a 3-minute chart, the 15-minute chart, and I will look at on the hour chart. So I'm going to try and decipher now, is it a good time to still short? You know, am I going to look for a short here? Let's say I want to look to short the next CC. Okay, let's say I want to short here. Am I going to take this short? Well, let's work it out together as if I had if I had not looked at this chart today. First of all, the first thing I'm going to say to myself is, okay, let's see, do I have any confluence? I would never short a CC on its own. So the first thing I'm going to look at, do I have a point of control here? No. No confluence on that CC with the point of control. Okay. Do I have the VWAP here? No, I don't have the VWAP. Also, no confluence there. Do I have a speed fan coming up on this level? No, I don't. Not one that I would trade off of. And on a low-term time frame like this, I'm going to have to lower these tick sizes. 100 ticks is way too much. Do I have any major volume coming in on that CC, which is 51,200? It's a bit of a higher term time frame. And 51,200 also has no major point of controls. So I can say straight away, I have no confluence to short that CC. I would not short this CC because there's no confluence. So I can already say that CC is there. Yes, that CC is there, but I would 100% not short it because I absolutely see nothing lining up with that level that tells me to short that level. Okay, so I would have to wait for another move up through this. E.g., I would only be able to short this again is if we come up higher. There's a CC here, but I know I'm 100% I'm not going to short it because I don't see anything else lining up with the level. And, you know, how do you know? You know, why do you want to take only the best trade? You want to take the highest probabilities. And if there's nothing giving you a highly probable trade, then you're not going to take it, are you? So for me to like compound, I'm going to have to see a move higher than this higher than this. So where could I say next then? Okay, where's the next short I might be interested in? It literally would be again on the daily, to be honest with you. It would have to be another move to the daily. Yeah, that's where my confluence is, literally the daily. You see all these point of controls, point of control, point of control, point of control, and it's literally on the daily. So it's like the only short that I could take is the daily. This is why I was so comfortable taking it earlier. You have the point of controls that were like literally on the daily. You had the daily itself. You had the trapped longs above the high. Like this was the easiest short in the world earlier. This one here. Not to make anybody feel bad or anything, but that was a short that I feel everybody should have taken if they had studied the materials. Very obvious trade. And obviously it's come down. You can have 100% you'd have taken profits on this. This is trading the 1 minute chart. You come down and you took the lows. This is already a 2.5% move. You know, stick a few $1 million on that. You're making nearly, 50 grand. So this is obviously a big take profit, in my opinion, definitely. Okay, so where do you look to compound this if you still want to short? Well, I would have to see at least another move up to here for thinking to myself, okay, this is something I'd short. The thing that I'd bear in mind is the more times you test a level, the weaker it gets before you break it. So if you do this, and then this, and then this, and you break through, expect it. Look what happened yesterday, yeah? How many times do you test this level? Look, the more times you test the level, the weaker it gets. 1, 2, 3, 4, 5, 6, 7. And then you start doing higher low, higher low, higher low, higher low, higher low. Like, in what world did you not think this was going to break through last night? Okay? In what world is this not breaking up? We've already seen the decreases in open interest. We've already seen the bullish divergences. We've already seen the massive amount of shorts and price not breaking down. And then you start doing higher lows onto that level. There's only so much times you can sell that before it breaks. The same scenario here. Okay, if we start to do this, you got to know not to keep shorting this level, because you keep on testing this with higher lows going into it, it's going to break up. It's very likely going to break up. But nevertheless, you obviously still have another opportunity on this. So what I would do is set an alert. We will set an alert here. If it comes up, I will happily take another trade on stream. So, yep, there's that. So looking at this on the lower term timeframes, and what information can we get? The decline in price that we saw earlier to take these lows. Look at this. Open interest declined. Open interest is increasing as we're going back up. So this is obviously bullish. This is bullish because you're declining on the decrease in open interest. Your increases are on increases in open interest. I would say that's bullish. That's another reason why I know not to short this CC, because probably speaking in terms of probabilities, I really don't feel it's a good short. 20 million, 13 million new longs opening. So you just literally saw 33 million new longs after seeing 57 and 67 million longs close here. I don't know. It's just like looking at these sort of this information is just, it's extremely useful. Being able to read the volume is how you decipher which moves to take and which moves not to take, in my opinion. It really is as simple as that. So that's what I'd look at on the lower term timeframes. And for the higher term timeframes, I do want to talk you through this because I had a lot of people interested about it. And that was my Elliott wave count from Sunday, where obviously I was talking you through. I really feel that Sunday's live stream was really useful, because we were obviously talking about Bitcoin as we were down at literally $44,000. And we were saying how we were reading the psychology in the market of knowing everybody wanted a long $39,000. So my exact words were, we're either going to break straight through this and go much lower, or we will never hit this level and everybody waiting to buy $39,000 misses out on the move. Obviously, we went for the scenario in the end. We can see on the charts. You missed that and everything goes, everybody waiting for 39 missed out. And, well, what was another really key factor of why people missed it? Well, of why this is, in terms of our Elliott wave count, still bullish. You know how I told you that this 2-4 trend line is like massively, this is so important trend line. And you can get arbitrary trend lines, yeah, but how often do you see me using trend lines? Not very often. And if I put on a trend line, how often is that trend line literally massively important? Like, go back and watch some of my public videos and just make a note. When I use a trend line, it's always going to be a very important trend line. It's always going to be respected. And this is a massively important trend line because this is your Elliott wave trend line, which is a 2-4 trend line. So you take your trend line from the bottom of 2 to the end of 4. And wave 3 is over when you break the 2-4 trend line. And we did not break the 2-4 trend line. E.g., this is still really big support. And this can still extend upwards. Because until we break this trend line, wave 3 is technically still in and we are still making a subwave. So this is such an important trend line. And this is basically a trend line. I'll explain this really quickly. If you go 1, 2, 3, 4, 5, to know when wave 5 here is over, you can go from the bottom of your wave 2 to the end of your wave 4. And you would know that wave 5 is complete when you break your 2-4 trend line. So when you break this trend line, you can be confirmed wave 5 is in, and then you would look to short that next rally because you're then looking for this, aren't you? That's wave 1, that's wave 2, and then you're looking for the 3, 4, 5. And the only way you would know to short this next rally is if you've broken that trend line to give you a confirmation wave 5 is in. You're going to be shorting that all day long. And if you can get a move into the CC, gives you your best ever trade because that's a wave 2 short. You're going to get an impulse in the third wave coming, and the only way that you can know that, literally the only way you can know if wave 5 is in, is if you break the 2-4 trend line. So it's really good, easy, important to know that. And we never broke that. This is the exact trend line that I told you was really important on Sunday, and we never broke that trend line. So this is still really important. That's obviously on log scale. So yeah, I wanted to talk you through that Elliott wave. There was a lot of questions about that. On the bigger term timeframes, so this is my perspective on the bigger term timeframe. If we break through that trend line, then I do believe that we're in the process of putting in the wave 2 here. So that would give us our top of the 5, and then we would be looking for this to come down in the 1, 2, 3, 4, 5. And the way that we would expect this to play out is something like this. A, B that breaks the trend line, then we look to short the C, don't we? Okay, that's what we're going to be looking for here. This is just going to be the A. So you don't really expect this. You don't really expect it just to do this. And this is where many people lose money, because they'd be thinking, oh, this is wave 2, and it's just going to do this. Whereas, no, that's not really that likely. What you have to think, it's more probable that it does this. A, B, C, and then down. So once you break, the only way you'd know this is break the trend line, then you get your short for the wave 2, don't you? For this third. So that's the way that I'm approaching my short position, really. In the bigger term timeframes. The trend line basically for me is going to be the confirmation. You can obviously speculate that we're going to put in a wave 2, but you don't know until you really break the trend line. Because if you never break that trend line, it kind of invalidates looking to short here, and you can expect a new all-time high to come. But if you break that trend line, then you know to short for the ABC in the 2 before you come down for the third. So that's another thing that I would be really aware of. Thinking what else I can go through here. Trying to think what else I could go through. Let's see if there's any questions, I suppose. That's the majority of what I wanted to talk you through here. The importance of the trend line, the importance of reading the volume and recognizing how we were in a short squeeze, how to recognize the context behind the move. Like, are you coming from a fake out? Fake outs are always going to give you the most, the best trades and looking for continuation. Yeah, period. So yeah, if anybody has any questions, let's see. If you were shorting the daily 5163, why would you put the stop loss so far above the high? I know you love wide stop loss. Why don't you just put it? So, yeah. I basically don't use, so when I trade, I basically don't use a stop loss, to be honest with you. And again, I'm not saying people should follow me with this, but I basically don't, I never, ever use a stop loss. But, yeah. If I am going to place a hard stop loss in the book, which I just don't do, but if I wanted to place a stop loss in the book, I would never in my life, ever place a stop loss like above the daily, for example. So if I wanted to take this short and I'm looking to short here, even though I'm basing my trade off of this, there's no way I would ever in my life do this as my stop loss. I would never ever do this. Why? Because for the way that I would have viewed this is I would have, if we had broke through this daily, I would have shorted here as well. So I would have continued to add to my short position, because my invalidation is not, I'm not invalidated on this short if we come to the CC. So this is still another opportunity. I'm only wrong if we come back above where all the trap longs are. So that's why I would never put my stop loss here, because it's I'm not wrong on my short if we come here. I'm only wrong on my idea if we come back above the high. So that's why I would never place a stop loss here. And also I absolutely hate small stop losses. I just hate, and this, I literally never do it. So I literally hate using stops. And I also hate just having the worst thing in the world is using a tiny stop loss. Loads of people think, oh, if I use a small stop loss, I'm going to lose less money. But in my opinion, if you use a small stop loss, you're just going to get stopped out before the move even happens. The majority of the time. I think more times than not, you're literally going to be losing more money from using a stop loss that's really small than if you just actually put a big stop loss and use smaller position sizes. In my experience, you're much better off using smaller position sizes and a wider stop loss than a bigger position size and a smaller stop loss. Because I think the majority of the time the market hunts people's stop losses, because majority of people place all their stop losses in obvious places. So it's not hard for the market to take stops and then reverse. It's just how the market works. So I would never ever use an obvious stop loss. I just never use a stop loss, period. But obviously if I'm asleep, I'm going to place a stop loss because I'm asleep. But if I'm scalp trading in the day and I'm at my computer, you will never, ever, ever, ever see me put a stop loss in the book. Unless it's very rare circumstance, like I'm on the live stream or something, and then I might, because I'm not concentrating. It's really hard to concentrate and commentate at the same time. The two C's, concentrating and commentating, are very difficult, like for a trader. If I'm on a live stream, I might place a stop loss. How did you recognize short squeeze? I realize you must have deducted it was short closing, but how can you show an XO? Where did you see that? So yeah, obviously today I was talking about the short squeeze a lot, but let's bring it back on here. The reason why I deducted that this was a short squeeze, was really simply just from the context that we had of, we have just broke a major reference level and spent a lot of time below that reference level. So when we come back above that reference level, the millions of shorts that have closed here, the millions of shorts that have opened here, what's happening to them? They're going to get squeezed as price is moving up. I don't know really how to just explain that fully, but essentially, you look at the open interest that was occurring on this rise. So you got aggressive longs opening and you had millions and millions and millions of trap shorts at the low. So it's like, I guess the name doesn't really matter, whether it's a short squeeze or whether it's just a very impulsive move you don't want to short. Either of the names, I don't suppose it really matters. At the end of the day, it's just recognizing you've had a deviation from the range. You've had a lot of time spent below in the deviation, and you're now rising again with increases of open interest and volume. Like, that's all you need to know you did not want to be looking for shorts in any of this rise. Even up at the daily here, you did not want to be looking for shorts. And if you watch my videos, I told you I'm not taking a short here. I didn't take a short even up at the highs. I had to wait for the loss of the level and the retest before I had any acceptable short position. So yeah, there's that. Let me see what you mean. Oh, right, yeah. So he is basically asking the question of, is this a good short position from... I shouldn't have deleted everything. From this back test here. And the answer is yes. So yeah, this would have been acceptable. That would have been acceptable on the 1 minute time frame, or an hour later. Yeah, 100%. That would have been acceptable. Why? Well, if you break above, if you get an impulsive break up, then the worst really is you wouldn't want to see it come back below here. Okay, you wouldn't really want to see it come back below these highs. You come back below the highs, but you obviously don't break the daily. You've made your attempt here. If you see a first back test, that's where it should have taken off. If it was bullish and you got a back test, shouldn't have broken back down below this first low of the back test made. Okay, so your first back test here, if this was a bullish breakout, you should have done that. But if you do your first back test, you break up, and then you lose it again, and then you lose your big reference level, yeah, I would agree that was definitely an acceptable short position, 100%. Why? Because you've already done your back test, and then you broke below your back test, and you also broke below the daily. So yeah, I agree that was an acceptable short position, to be fair. 100%. Yeah, I'll show you the exact trend line. Let's just delete this. So you can see I've got this trend line drawn from the bottom of wave 2 to the bottom of wave 4. This is coming in on the 11th of December, about 12 o'clock my time, till the 27th of January, around 12 o'clock my time. So the 11th to the 27th are those pivots if you want to do it the same. And do you need to use log scale? In my opinion, yes. Why do we need to use log scale? Because this is really, really impulsive. Remember back to the why we use log scale stream. You want to use log scale if you're looking at old data. I mean, we're looking at data that's nearly a year old. And if the move is very impulsive, well, this volatility is crazy. You know, this is over a 1,300% move. So that's why you need to use log scale, because it's very big volatility and it's quite old price action as well, you know. So those are the reasons why you want to use log scale on this. You're looking at old data, and the data you're looking at is very volatile, you know, thousands of percent. So that's why you need to use log scale if you're doing an Elliott wave count here. I'm sorry, by the way, if I put this, I always forget, I put the microphone too close to the mouth, and then you can like hear me swallowing and drinking, and everybody finds it horrible. And so I need to remember to put this back a bit so you don't literally hear me swallow, because I think people find it like, oh, this is so disgusting. Sorry, I sometimes just forget. I would just say my standard, the standard template, the standard one that I use. So obviously it depends on your time frame that you're looking at. The lower the time frame, the lower you want to move down your tick sizes. But I would generally be, if I'm looking at a time frame 5 or 15 minute chart, so either the 5 minute or the 15-minute chart for your intraday trades, or if you want to look at the volume, I'm using at the moment a lot of the 40 million charts. I find a 40 million chart is it's not too cluttered, it's not too quick, it's not too slow. The 40 million chart is what I'm using a lot for if I want to use the volume chart. Especially, you'll see this. This defaults to 5 minute, but I'm always changing it to 40 million. I should just set this up as my default. But when I'm looking through this as well, I'm also always using the 40 million charts. And you see here, this is what you're going to be learning, by the way, soon. And we just back tested the New York point of control perfectly for this bounce. This is a big support level. And then your daily is obviously that resistance. And we have really important support now at 47,800. This naked closed point of control. So I guess I'll just give you these levels now. You got massive support at 47,800. A minor support at 48,725. If you lose these two levels, that's very likely you're breaking that very important trend line. So if you break those levels, it's very likely that you get a really nice short position on Bitcoin. And again, if we break down, I literally am going to be looking for like $30,000 period. Like I will be trading for $30,000, which is obviously nearly a 40% decrease in price. So that will be brilliant. Yeah, that will be brilliant. But again, that's not really confirmed yet until we break down. So it's just something I got my eye on. So yeah, volume, I'd look at 40 million. I don't really use the delta charts. And for the time, 5 and 15 minute chart. Yeah, yeah, definitely. So what is a deviation? Where a deviation is really simply a move out of the norm, could we say? So if we've got this as the norm, okay, and if you move below that, but then come back to the norm, this was your deviation from the normal, let's say. This was a deviation of your range. So if you have a range, or if you just have a level, let's say, and you come below the level, but then get back above, this is just a deviation of that level, isn't it? How do we know it's a deviation? You don't know it's a deviation until you get back above the level. So during the time spent below, it's acceptable, in my opinion, to be shorting. It's acceptable. I can understand why. But as soon as you get back above, oh yeah, you have to, if you are shorting here, you have to close your shorts, because otherwise, well, that happens, So what is a deviation? It's a deviation of the level. And how do you know it's a deviation? As soon as you get back above. So as soon as you done this yesterday, as soon as you got back above here, you should know with 100% you got to close that short. There's no reason at all why you should still be in that short. And obviously you could look for longs at that point, because you've seen a deviation of a major level and a deviation for literally 6 hours, which is obviously a lot of time. Cool. So that's all those questions. And that's all that I've seen in here thus far. I see a lot of people asking about the templates. The templates are all in they're all pinned within general chatting contenders. They're all pinned. They're all pinned messages. So this is obviously the standard. And then I've just changed the time frame, changed the tick sizes. Nothing else really. See, I can see Victor typing, so he might be typing some more questions. I'll wait and see what he says here. Cool. Well, there we go then. So, I mean, I've talked through the majority of things I wanted to talk through. In this stream, talked you through the deviation, what the open interest was like to give you the deviation in the first place, the bullish divergences that you formed off of this, or just the amount of really massive selling with price not even moving down is a bit of a bullish sign. As soon as you get back above that level, you've got to recognize it's likely going to cause a short squeeze. You got to then know to not short at levels which you might normally short by saying, what's the context behind this move? Literally it's a short. It's likely going to be an impulsive move to the upside. Why would you want to short that? How do we know then it's an acceptable short the next time that you test the level? Well, because the context has changed. The context has gone from the middle of a short squeeze to finally seeing a pretty decent decrease in price, taking out last lows, changing that strength. The strength has then gone, hasn't it? You see 199 million longs all up at those highs. And, you come back below the level, then you get an acceptable trade. I mean, in terms of the medium term here, You obviously did have at this region to CC, of course. I mean, I would really love a decrease in price, you know. To be honest, I would like a decrease. I guess we can put that back on. I suppose my favorite scenario, if I could choose, would be move up during Asian session to the CC here before big long squeeze. So you see lower prices. It's obviously a very easy trade to take. Just trade it off at the top of the CC. Yeah, and if I got the confirmation of this, then I literally would try and short this to like $30,000. To be honest with you, where would I be wrong on this trade? Well, literally above the highs. Where would I try and short this to? Literally $30,000. Actually, maybe just $32,000. This is what I would look for. $32,000 to $26,000. And of course, I'm not going to hold this all the time. We might not even come down this low. So obviously you're going to have major take profits along the way. You know, you could just bounce off of this daily and do this, for example. So of course you're going to have to look for take profits. And we might not even get that short setup. So that's what I would really like though. But you know, maybe Michael Saylor buys a million more Bitcoin and we just pump it. So we'll have to wait and see. But that's kind of what I'm looking for in a medium-term time frame. Invalidate top of the CC 56,000. You know, you have to remember as well. You don't always need to be in you don't always have to be in a trade. So you know, if you're not feeling comfortable, then you can stay out of the market. You know, and yeah, that's how I would literally approach it. You know, if you do start to reclaim the daily again, so then you've obviously invalidated this local setup of that short. Then you could obviously look for the long from the daily to the CC, and then you could see at that CC, do you get a rejection or do you just go straight through it? Or if you go straight through it, then you could stay in your long and just not short. Or if you come to that CC and reject, then you would close the long and enter a short position. So you always have, you know, you can long up to the resistance, and then at that resistance, see, do you reject? Switch into a short. If you don't reject, stay in a long. You know, it's pretty, I don't know, that's how I would approach it. $52,700. How do we know it's trap traders? Yes. So how do you know that these traders are trapped at the highs? The only way that you would know that is by looking at your open interest. So you see here that the open interest is increasing. Well, the only way that you could try and say that they are trapped is by looking at the open interest. If these are new positions opening at the highs, then you're obviously trapped. Whereas if this was if this was going up and open interest was going down and down and down and down, then you're just going up from shorts closing. So you wouldn't have the possibility of having any trap traders up here because it's just longs. So it's just shorts closing. But because your open interest increases, that shows new longs opening. Well, then obviously if you start to decrease, they're trapped up at the highs, they have to close. Whereas if this was open interest going down with price going up, that's just shorts closing and you don't have any trap traders. So then your retest of the daily is not going to offer a good short because you don't have the possibility of any trapped longs. But because of the open interest that we saw on the rise, this was an acceptable short because I saw trap traders or the possibility of trap longs. Whereas if that was open interest going down and down and down, that wouldn't have been a short for me because I wouldn't have had that confluence with trap traders. Obviously, we looked there. You have that point of control, point of control, point of control, point of control, point of control. Look at this. Where you come back up into is all of those point of controls. So that's obviously another thing that was really, really good about that setup. But again, the more that we test that daily, the more that we test this level, the more likely it is that we break through it. You know, if we keep on doing this, then it's likely that we just break through it, you know. That's one thing that I would be aware of. It's very likely that we break through. And there you go then. So that's everything. I will call it a night and put this on the website for you. So I hope you've enjoyed and looking forward to the start of the new series for the TPOs. And without further said, I will once again hope you've enjoyed. Learn something about how we start to look at a context, why we look for deviations, why we look at the open interest, why we look at the volume, and giving you some signals of this, how we can look to know not to short for next CC because of looking at the open interest and the volume. Like, I don't know, it's the same things that we're looking at, but obviously the more that you see us using it, the more second nature it will hopefully come. So there you go. Hope that you've enjoyed, and I'll put this onto the website for you. Cheers, everybody. Thank you, and have a brilliant evening. I'll see you soon. Cheers. Thank you, and goodbye.